September 10th, 1964 would turn out to be the birth date of one of China's most influential tycoons in history, Jack Ma. Jack was born into humble beginnings, and his path to becoming one of the richest people in the world was far from orthodox. Jack was born in Hangzhou, Zhejiang, to conservative parents in a tumultuous time for China in which the Cultural Revolution was just a couple of years away. The Cultural Revolution was a socio-political movement in the People's Republic of China, launched by the now infamous Mao Zedong. Mao was born in 1893 and was a Chinese communist revolutionary and founder of the People's Republic of China in 1949, led through his role as leader of the Chinese Communist Party. So why is this important to the story of Jack Ma and Alibaba? Well, to understand that, we need to better understand what life was like growing up during this time. To say that Mao's ideologies and methods of control were somewhat draconian compared to what we're used to in the Western world would be an understatement, a massive understatement. As far as Mao was concerned, there was no room for individualism, contrarianism, and capitalism. The people of China were a collective and should act as such. Mao soon brought in policies such as the land reform movement, which achieved land redistribution, particularly agricultural land, to the peasantry. Landlords literally had their land confiscated, and those who opposed the policy were subjected to mass killings by the CCP and former tenants of the farm, with estimated death tolls ranging from hundreds of thousands to millions. Another policy, which to the majority of the Western world will again feel entirely alien, was known as the Campaign to Suppress Counter-Revolutionaries. The idea was simple: eradicate opposition of the CCP at all costs. Those who dared to stand against the CCP were labelled as counter-revolutionaries and publicly denounced in mass trials, ensuring to make an example of those who would dare to think differently. The result? Well, according to the CCP, 2.6 million people were arrested in the campaign, with 1.3 million of those imprisoned and subject to labour reform, with a further 700,000 executed, though various researchers and scholars estimate figures as high as 2 million. Whether the death toll be 700,000 or 2 million, it pales in comparison to the number of deaths caused by arguably Mao's most controversial policy, the Great Leap Forward. Mao launched the Great Leap Forward in 1958 in an effort to reconstruct the country from an agrarian economy into a communist society, ultimately responsible for the starvation and death of as many as 55 million people, the largest famine in human history. So growing up shortly after this trauma, with the ripple effect far-reaching across both space and time, it's safe to say that Jack Ma didn't have a favourable view of the CCP and its stance against free thinking and individualism, and the reality of that would become increasingly evident over time. Because of this, Jack realised from an early age that there was more to the world than China alone, and that learning English might be his best chance of successfully escaping the iron grip of the CCP. At the age of 12, Ma bought a pocket radio and began listening to English radio stations every single day, teaching himself the basics of the language. He then began to seek English speakers at the Hangzhou International Hotel to practice before landing himself a job working as a tour guide to English-speaking tourists. Unlike the countless stories of many successful entrepreneurs that we hear about, like Mark Zuckerberg and Bill Gates attending Harvard University prior to starting their own business, Jack Ma was less gifted when it came to education. In 1982, Ma applied to a local college but was rejected for scoring just 1 point on the mathematics exam. The following year, he tried again, and once again, he was rejected, this time scoring only 19 points. One thing that we learn about Jack Ma throughout all of this is his determination to pursue his goals, and over the course of the next year, he would study relentlessly before going against the will of his parents and taking the test a third time, absolutely smashing it and scoring 89 points to finally be accepted to study English, which he eventually graduated from as top of his class in 1988. But the obstacle of education would be the first of many, as Ma wouldn't have an easy time finding his feet in a solid career path, and was rejected for every single graduate position that he applied for. After spending some time between various low-level paying jobs, Ma began to hear news of a new invention that was about to change the world. That invention is what we know today as the internet. Although invented in 1983, it wasn't until 1993 that the World Wide Web announced it was for everyone, and inspired by its potential, Ma packed a bag as quickly as he could and jumped on a flight to the US to learn more about it. Ma was absolutely fascinated and spent the next few days searching the internet for everything it had to offer, and after quickly realizing that there was very little information about China on the internet, he thought it would be fun to launch his own website with information of the different type of beer available in the country.
So I first word search beer. There's no beer information on the internet from China. There's a Japanese beer, German beer, US beer, and then I search China. Say there's no data about China. So I thought about, if I can put some Chinese information on the web, when people find out, that might be a good opportunity.
Just 3 hours later, Ma had received emails from 3 Chinese investors to learn more about what he has to offer and whether he would be interested in various investment opportunities. And it was at this moment that Ma truly understood its untapped potential. The next few years would see Ma develop and leverage his relationships with friends in the US to begin building websites for Chinese companies, but it would be 1999 where things get really interesting. Ma saw the incredible growth of e-commerce websites eBay and Amazon in the late 90s, but noticed a gap for the Chinese market. By this point, one of the fastest growing economies in the world. Ma had a vision to not only improve domestic e-commerce, but to also use his English to help export Chinese products globally, something he knew was required to build a truly worldwide enterprise. A fascination with global domination in the e-commerce space wasn't the only similarity that Jack Ma shared with Bezos. Another similarity was the lack of startup money at the very beginning, with Bezos founding Amazon from his garage and Ma founding Alibaba from his Hangzhou apartment on June 28, 1999. Things got off to a flying start for the business, and just 4 months after its birth, Alibaba received a $3 million investment from Goldman Sachs for 33% of the business, which might seem insane given the company had barely been created, but you have to remember the timing of this investment. The era now infamously known as the dot-com bubble, where all a company needed to secure an investment was a website domain. A lot of investors were severely hurt when the music stopped playing, but that wouldn't be the case for Goldman Sachs and Alibaba. And actually, the biggest amount of pain for Goldman on this investment was the timing of its exit. Goldman sold its stake in 2004 for about $22 million, a very healthy 7x return. So where is the pain in that, I hear you ask? Well, Goldman Sachs today is worth around $100 billion. The value of that 33% stake in Alibaba would eventually go on to reach $300 billion. But Goldman wasn't the only early investor in Alibaba, as SoftBank invested $20 million in early 2000, which is now widely considered one of the greatest investments of all time. But the business doesn't come without controversy and a dark history. Despite his somewhat harmless demeanour, Jack Ma soon developed a reputation for being a ruthless leader who would stop at nothing to succeed. Ma is well known for being an advocate for the controversial 996 working hour system, a Chinese work schedule that sees employees work from 9 AM until 9 PM, 6 days a week. Brutal? Absolutely. But there's no doubt the company benefits from the fruits of its employees' labour. While it took Amazon just over 7 years to finally turn a profit, it took Alibaba just 3. This kind of success in the business world simply doesn't go unnoticed. And eBay, one of the companies that inspired Ma into founding Alibaba, wanted to get a piece of the pie, announcing in 2003 that it would be expanding into China and even making an offer to buy Alibaba's subsidiary Taobao. Recognizing the risk that eBay posed and again demonstrating his ruthless attitude, Ma slashed prices to run the business at a loss, quickly strangling any opportunity for eBay, forcing eBay to close its Chinese operations before it could even really get started. Alibaba, on the other hand, continued to grow and expand across China, crushing its competition through anti-competitive tactics and acquiring businesses before they can get ahead. The spread of Alibaba across China and eventually the world was like a virus. Initially concentrated only within e-commerce, countless acquisitions would create a portfolio empire that would rival that of Amazon, and it was fast becoming the Chinese market leader in cloud computing, similar to AWS, digital media, similar to Amazon Prime, Ali Health, with a focus on pharmaceuticals, and Alipay, the world's largest fintech company by value, and a company well ahead of its competition in terms of technology. We're talking about a business that has been using facial recognition at checkouts for payments for a number of years now. In other words, if a sector is profitable, you can bet your money that Alibaba owns a company in that field, and it was this apparent need to conquer every single industry that had potential investors in the United States banging the table and demanding an IPO so that they could benefit from the insane growth the business seemingly had to offer. And this is where things really started to unravel for Alibaba. You see, private companies can get away with disclosing far less information compared with public companies. There is no requirement for the public to understand every last detail about who owns the company and the financial dealings going on in the background. But with an IPO looming, that was all about to change for Alibaba. In order to float on a stock exchange, the company must publicly release what is known as a prospectus, a key IPO document which outlines to any potential investors all key information of the business. And this was going to be a problem, because it would soon become apparent that there was some, let's say, shady dealings going on behind closed doors. So you might remember the company Yahoo. Well, not many people know this, but Yahoo actually bought a 40% stake in Alibaba back in 2005 through what is known as a variable interest entity, meaning Yahoo didn't actually own Alibaba, but instead owned a shell company which had contractual rights to the profits of Alibaba. Variable interest entities are often used by Chinese companies as a way of bypassing Chinese laws, which forbids foreign investment in certain companies. And for all intents and purposes, the investment should function as any other investment, or at least that's what Alibaba told Yahoo, meaning that Yahoo should be consulted with for any major business decisions, given that they effectively owned an almost controlling stake in the company. Or again, so they thought. On September 18, 2014, the prospectus was finally released and cheers of joy was heard right across the globe. But the executives at Yahoo realized one key detail. Alipay, the world's largest fintech company in the world valued at billions of dollars, was nowhere to be seen. In a frantic panic, the executives of Yahoo immediately contacted the underwriters at Goldman Sachs, JP Morgan and Morgan Stanley to explain that there was a mistake and that there was billions of dollars of value missing, meaning that the prospectus needed to be withdrawn. The response? Laughter. Jack Ma and the executives of Alibaba had sold Alipay 3 years earlier. Yahoo were just never told about it. When asked how this was possible without them knowing, and more importantly, who was the buyer, the answer was shocking. The buyer of Alipay, one of the crown jewels of Alibaba's business, was a brand new Chinese company called Ant Group, set up and controlled by none other than Jack Ma. In other words, Jack Ma had managed to siphon Alipay from under the nose of Yahoo without its consent, and the consideration paid was never disclosed. When questioned, Alibaba executives along with Jack Ma claimed the transfer was required under some dubious terms outlined by the Chinese government relating to foreign ownership in the event of Alibaba's IPO. So did the Chinese government force Jack Ma's hand here, or was there something more malicious going on? And more importantly, why on earth was this not disclosed? Although outraged, Yahoo didn't have a leg to stand on, because remember, they didn't actually own Alibaba. They owned a shell company which was entitled to the profits of the business rather than the business itself. In other words, they had no control. So naturally, when news broke of this, investor sentiment was crushed, and Alibaba no longer had a long list of American investors willing to throw their money at the IPO for a possibility of this quasi-ownership of Alibaba. Or so you would think. In fact, this news did nothing to quash the hunger and thirst for China's fastest growing and largest business by merchandise volume, because the IPO was extremely successful, and the company broke the record for the largest US IPO in history. It was larger than the IPOs of Google, Facebook, and Twitter combined. With the shares opening trading on the first day at $68, the company was now valued at $231 billion just 15 years after its inception, and the performance of the stock on its first day? Phenomenal. The stock skyrocketed to $94 a share, an increase of 38%. The stock could do no wrong. As far as investors were concerned, corporate governance issues were simply not an issue. That was, of course, until they were. By this point, although retaining his position as chairman, Jack Ma had stepped down as CEO of Alibaba as Ant Group continued to flourish and required more of Jack Ma's time than ever. He also said that he wanted to focus on his philanthropic efforts through the Jack Ma Foundation supporting education, environment and public health. But what did this mean for Alibaba now that its creator had taken a back seat? The company was now a publicly listed entity with extremely high investor expectations for exponential growth, and pressure was quickly mounting on the company to perform. And as we know, extreme pressure can bring desperation. As the company's sales and profits were growing along with its popularity in the Western world, so too was the number of complaints of fake and counterfeit goods being sold on the platform. So much so that the Office of the United States Trade Representative added Alibaba to the notorious markets list, joining the likes of illegal sites such as the Pirate Bay, effectively placing a huge red flag over the legitimacy of the company. And finally, investors started paying attention, offloading the stock at whatever price possible. The value of the company was cut in half and was now trading at $58, almost 20% below the value at IPO. And it would be this kind of volatility and turbulence that would be a sign of things to come. With that being said, the next 5 years would see Alibaba keep out of the headlines and continue to live up to and even exceed high investor expectations. Sales grew from $12 billion in 2015 to almost $110 billion by the end of 2020. Traders, by their very nature, are very fickle, and once again, all concerns were alleviated. The stock rallied from $58 all the way to $305, and the company was well on its way to becoming one of only a handful of companies with a market capitalization of $1 trillion or more. Everything was perfect and Alibaba could do no wrong. Except it did. And we were on the cusp of one of the greatest downward spirals of any public company. History doesn't repeat itself, but it does often rhyme. In late 2020, a dark secret coming out of China was leaked, and Alibaba would be accused of something reprehensible. Leader of the CCP, now Xi Jinping, was accused of being responsible for what would later be termed the Uyghur genocide. Between 2014 and 2021, more than 1 million Turkic Muslims were incarcerated into internment camps without any legal process, supposedly for the purposes of re-education and training. In reality, this ethnic group has been subjected to forced labor, sterilization, indoctrination, and abortion. Chinese government statistics reported that from 2015 to 2018, birth rates in some Uyghur regions fell by more than 60%, compared with the entire nation's decline of just 10%. Whilst acknowledging this decline, the Chinese authorities ignore all other allegations. But one might say, as dark as that may be, what does it have to do with Alibaba? The answer is far worse than you might imagine. In December 2020, the New York Times reported that Alibaba had developed and marketed facial recognition and surveillance software specifically configured to detect Uyghur faces. Alibaba responded to say it was dismayed to learn that its Alibaba Cloud subsidiary had developed this feature and that it was developed in a testing environment and it was not deployed by any customer. Still, it begs the question of why was it developed in the first place, and raises serious concerns of what this technology might be used for in the hands of the wrong people. But the situation at Alibaba was about to get a whole lot worse, as Jack Ma and the CCP continued to clash, as Jack Ma continued to publicly speak out about the draconian communist government. The problem, for Jack Ma at least, was that there was only going to be one winner. Although Jack Ma had now stepped down from his role as chairman of Alibaba as of 2019, a significant amount of his net worth was still tied up in Alibaba shares, as well as his ownership of Ant Group, which was not yet publicly traded, making him incredibly vulnerable to the actions of the CCP. Things started hotting up and Jack Ma decided he needed to reduce his exposure and cash out of the Ant Group business through an IPO, and the interest from foreign investors was huge. This was an opportunity for Americans to get their hands on the profits of the largest fintech company in the world. Whilst Alibaba's valuation at IPO was over $200 billion, Ant Group's valuation was estimated at over $300 billion. This was set to shatter all records and be the largest ever IPO. Everything was going to plan, and Jack Ma was about to cement his legacy as one of the greatest entrepreneurs to have ever lived, being responsible for founding 2 companies with a combined value at over $500 billion at IPO. Except the Chinese government were not about to allow this to happen. Just days before the scheduled IPO date, news broke that any form of deal was off the table, with the CCP citing concerns over a lack of regulation over its largest finance and technology businesses. The reality is that China has some of the most onerous regulations in the world when it comes to business, so this statement in itself was perplexing. News of this triggered a cascade of sell orders by investors all over the world of China's stocks, with Alibaba most severely impacted. You see, what I didn't tell you in this story was that Jack Ma and Alibaba reached a deal in 2018 for the repurchase of 33% of Ant Group shares back to Alibaba, just 7 years after Jack Ma had took it upon himself to spin off the business. That meant the suspension of this IPO was also a way of preventing Alibaba and its investors in receiving billions of dollars. Instead, Alibaba's market capitalization tumbled by over $60 billion in a single day. But $60 billion is small change compared to what was about to happen in the coming months. Just as the world was awaiting an explanation of what was going on, Jack Ma was nowhere to be seen, and reputable news outlets including the Financial Times reported that the disappearance may have been connected to a speech in which Jack Ma, once again, criticized China's regulators and banks, spurring rumors of a possible government-instructed kidnapping, torture, and even assassination. On the 24th of December 2020, with Jack Ma now seemingly out of the way, and the CCP clearly in the Christmas spirit, they launched another attack on Alibaba in the form of an antitrust investigation, supposedly due to monopolistic practices, ultimately fining the company $2.8 billion. This would prove to be the final straw for Western investors, as it was clear that foreign investment was no longer welcome in China. As investors rushed for the exit, the stock plummeted, losing over $300 billion of value in just a few weeks. The outlook for Alibaba would only get worse as the political situation in China was worsening, driven by draconian COVID-19 restrictions. The once growth behemoth that was China's economy was now falling further and further behind when the rest of the world has returned to normality, and the company would ultimately fall from highs of almost $1 trillion all the way down to below its IPO price by October 2022. The economy, the company, the stock was finished. But then, something in China started happening. The Chinese people began fighting back, protesting against the CCP for keeping ordinary citizens locked up in their homes like convicted criminals. Hundreds of thousands flocked to the streets to make it clear that they would no longer accept the restrictions which had been placed upon them. An individual protesting was a problem for the protester, easily silenced and placed into re-education camps. But hundreds of thousands of protesters, well, that was a problem for the CCP, and in a historic event, the CCP caved to the pressure of its people. Individualism and contrarianism, the traits that Jack Ma had carried through his rise to success, disappearance and reappearance, was now working to raise the people of China, and ironically, Alibaba, from the depths of despair. At the same time, the Chinese government appeared to make a serious U-turn after releasing a paper outlining 15 new policies to make foreign investment attractive once again. And it seems to be working, with the stock up over 80% in the last 3 months, and raising the question as to whether we're seeing a rebirth in the prospects of Alibaba and its relationship with the Chinese government. But remember, at least one thing in all of this is clear. History doesn't repeat itself, but it does often rhyme.